Good afternoon, welcome to Market Wrap number 167. This week, the buy-to-let market in crisis. Is there an exodus of landlords? Why? So we're just going to look at the rental market in the UK, see what's going on, see what's occurring. Is it still a good buying opportunity? Are people leaving it in droves? Please do like, subscribe, share if you think it's any good. If you don't, tell us no good, that's fine too. So the number of private rental properties in the UK is not keeping pace with rising demand. There are now 13 renters on average bidding a 50% increase in the mismatch between supply and demand compared to June 2022 last year, according to the industry body ALA, which apparently is the Association of Residential Landlords, I think. So how did this situation come about? Right to buy. If you recollect, right to buy allowed council tenants, mainly under Margaret Thatcher, started to buy their homes at a massive discount, and then successive governments have failed to build enough social housing to replace this, so we now have not enough houses for the lower earners and a rising population. Immigration's at 600,000 a year. House prices in England and Wales are now 8.3 times earnings, meaning even high earning professionals are finding it hard to get onto the property ladder. In addition, recent legislative moves to redistribute wealth and rebalance the rights of tenants and landlords means that profits for the latter, for landlords, have been chipped away. Tax changes such as getting rid of MIRAS, mortgage interest relief at source, and the costs associated with higher regulation such as landlord licensing schemes, 212 different bits of paper when I first started off there were 30. On top of that, interest rate hikes. As I said, the National Residential Landlords Association survey carried out between March and April showed a third of investors plan to reduce the number of properties they rent out, an all-time high, up from 20% the previous year. So that sounds pretty grim, people bailing out of the market. So whilst rumours of the great landlord death are spread far and wide, the truth is not out there. Firstly, one of the first places you'd look to see if there is a sell-off going on is looking at capital gains tax receipts. Not personally, I don't do that, but the government would. March 2023, the Treasury took 140 million from landlords selling property, only £300,000 less than April 2022. But house prices did fall slightly between that period, which could account for the difference. In that time, the number of landlords paying tax has increased actually from 11,000 to 13,000. That could be increases in taxes, or it could be more landlords. Secondly, the property portal Rightmove reports 16% of its listings for sale were formerly rentals, which is only 3% higher than it was in January 2019, while the number of properties to let are up by 8%. Stephen Nation, the lettings managing director at the estate agency Connells Group, who are pretty big, says, another positive that we are not seeing any, another positive is that we are not seeing any significant evidence of landlords leaving the market over the past 3 months, where tenancies are running smoothly. We don't expect this to change. If the tenancy is going well, landlords stick with it. So what about the review of the rental? Nation adds, looking forward, the prospect of the Renters Reform Bill doesn't seem to be proving too much of a distraction to landlords either, and the rhetoric around the EPC certification, energy performance certificates, standards for renting properties seems to be edging towards a more pragmatic solution. It could well cost anything between £4,700 and £10,700 per property to upgrade the energy efficiency of their investments for it to meet the EPC certification of C or above by the deadline of 2028. However, last week, reports suggested that Rishi Sunak would delay the target as to not overburden landlords. The upcoming rental reform bill, which would abolish Section 21 at no-fault evictions, allow pets as default and replace fixed-term tenancies with rolling periodic ones, has been cited by many in the industry as a reason landlords want to sell. And I've had clients phone me up and ask about this. Is it going to be a bad thing? What's this no fault? You want me to get people out at all? It's not the case. You know, if you're a good landlord and you plan properly, you can always deal with these things. Government estimates show that landlords are only facing an extra cost of £10 a year per rented property, and tenants £3 a year in additional costs if they have a pet. So it's not that much really. But fewer evictions will mean letting agents are set to lose out on £1,200 a year because they won't be replacing their tenants. So there's a little evidence of mass sell-off. But that aside, uncertainty surrounding new regulations coupled with fewer borrowing options could explain why investors are reluctant to expand their portfolios. However, the data shows that the restrictions to mortgage rate interest rate relief are much more likely to a reason that investment in buy-to-lets is lackluster. Because you've lost that tax efficiency, it puts you off. Whereas if it's hard to get a mortgage, that doesn't put you off. The number of buy-to-let properties in England steadily increased every year from 2022, but decreased by 34,000 in 2017, where the tax change came in. And then the stock continued to dwindle after that until the stamp duty holiday of 2020. The share of total property sales that went to investors dropped from 16% in 2015 to 11% in 2017, and it hasn't recovered since, according to Hamptons. Yet, contrary to that, in the Midlands and the north of England, investment levels have stayed the same. So it's only in the south, and the reason for that is because we can get much higher yields in the Midlands and the north to compensate for the higher interest rates. But the major figure that Hampton's got to talk about is that reinstating mortgage interest relief at source will be the government's top priority if it wants to stop people selling up. A survey on landlords and agents by Lettings platform, good Lord, can conclude that as well. 79% of landlords' top priority is related to finance, not regulation. So it's all about money if you're a landlord. And if you're buying from overseas, you have much better tax benefits. In the UK, landlords' profits are at their lowest since 2007, according to Savills. Between 2014 and 2021, landlords on average were making year one profits of 23% on rental income. In successive interest hikes since then say that they're now making a 4% profit on average. What do they own? Is it via cash or via mortgage? According to the English Housing Survey, 38% of landlords own for cash, 57% have a buy-to-let mortgage. Of these, 89% on interest only. That's interesting. It is these landlords that are most impacted by increasing rate rises, as you imagine. If you've got interest-only mortgage, it's quite low. If you haven't, it's quite high. The difficulties faced by mortgage landlords mean that Savills expect future investment to be dominated by cash buyers, purchasing smaller properties in the Midlands and the north of England. It notes that a steady sell-off in recent years is also a consequence of an ageing landlord population. Investors that have been active in buy-to-let since the early 2000s are now nearing retirement and are cashing in to fund it. Savills research reveals that 1,911,000 properties are owned by landlords over 65, with a further 1,982,000 owned by landlords between 55 and 64. Meanwhile, tenants bearing the brunt of this turmoil because not only are they getting less and less properties out there to rent, but also tenants having to put up with rents going up 5.1% across the board in the UK to June. So most tenants, I think, now realise that rather going out into what they call the furnace of the rental market, they're much better off negotiating with a landlord to stay on, and that's what's going on. Okay, rents in the UK are astronomical. New tenancies in Britain outside London are £1,231 a month on average, which is 33% higher than it was in 2019. Average rents in London are now £2,567. I mean, it's extraordinary. I mean, the things people are having to go to, the lengths. One of the guys in our office in Cardiff, had to bid a year up front, and this is what's having to go on. To stand out for competition, tenants have been asked to offer at least 3 months in advance, if not more. They're offering lump sum incentives. Hampton's research shows that 1 in 4 properties are now on 3-year plus, 2-year plus leases, where previously it was below 20%. So people are taking out longer and longer leases to try and stay in the properties, and that suits some landlords because it means that they've got a tenant sitting in, but it means it's more difficult to do increases in rent. And also, if interest rates do go through the roof, then how are they going to have to deal with that? So it's trying to mix between the two. What's the best thing to do? Perhaps introduce inflation-linked rent increases to control costs. Have that signed into the contract. That's been suggested by Arla, Property Mark. Some landlords, to finish, Martin Gerard from Arla says, some landlords are reluctant to commit to long-term tenancies because of the problems around the Renters Reform Bill, finance costs, and what will happen within tax over the next 2 years. It used to be 2 years was a long time, now it's a very short time. So planning even as a landlord is more difficult. So there we have the market wrap 167. The rental market in the UK is very buoyant. For a lot of people it's quite difficult to get into owning because it's so expensive. Now, I spoke about it last week, I think, saying that the number of millennials in the US is 72 million now, 1 million more than baby boomers, 71 million. And those millennials are not able to get into the housing market because it has become so expensive and it's such a large multiple to put down if you want to buy. That's the same in the UK. People aren't able to get in, so it means it is a very good rental market. But the key is, we just heard from that information, if you're buying with a large mortgage, you could well have a few problems getting an actual mortgage. But also, if we're not at the top of the cycle, which all the indicators are, we're at the top of the interest rate cycle going up, something terrible happens and it goes up further, that could be a problem. So put down on a deposit as much as you can, 30% plus. Consider doing interest only for a couple of years perhaps. Take out a good length of contract and make sure the agency is managing it and the tenant who goes in is good, because they are gold dust. So if you liked it, share it. If you didn't, comment. Thank you for watching. Do take care. Bye bye.